a bank bailout now.
Let's ask our Fox panel, Mike Norman, who I heard chirping over to my left here for the Economic Contrarian Update, Nicole Ridgway is from smartmoney.com, Jim Pethokoukis is from U.S. News and World Report, and Yaron Brook is of the Ayn Rand Institute, and Peter Schiff, the author of Crash Proof. Yaron, this is the first time we've seen you today. What do you think of this new plan?
Well, this is a bank bailout, as you suggested. There's no question about this. This is the Fed trying to bail Citibank and the rest of the banking industry out. And this is why stocks are responding in this way. I think that the market is interpreting this as the Fed thinks that the banking industry is in much worse shape than investors thought it was, and this is the market's response to that. But this is what the Fed does. It causes these problems, and then it tries to bail out the banks. And by bailing out the banks, it's going to create huge problems. You're going to see enormous inflationary pressures from this new $40 billion that's being brought into the system.
Mike, is that how it really is going to work out, that they make the mistake and then they try and bail them out?
Well, I get back to the point I made earlier. We didn't even have a central bank in 1907. A group of bankers got together, led by J.P. Morgan. They did the same thing. This is not a bank bailout. Look, if you look at capital positions of the major banks, if you look at allowances for loan and lease losses, we're still way better than where we were back in 1990-91, even higher than where we were in 2000 to 2002 period. This is not a bank bailout. What the Fed is trying to do here is break the back of this psychology, try to encourage lending. And by the way, there's no indication in any of the lending data, if you look at commercial bank lending, commercial and industrial loans blowing through the roof, even consumer loans being made by commercial banks now trending up after a period from March to August. So there's no indication in the data that
Nicole, what the Fed says, hold on a second, Yaron. What the Fed says it's trying to do is to lower those interest rates, but not so much that it encourages inflation. So they're making it a little easier to borrow from the Fed, a little more discreet, because banks who've been reluctant to do that because they didn't want to go there and announce to the world that they were having trouble. Now it'll be a little more discreet in the way they can do it, so the names of those banks won't get out.
Right, and I don't think that the banks actually need a bailout right now. I mean, they do have reserves. They do have other ways and means to get money, cutting their dividends, issuing preferred stock, getting investments like Abu Dhabi. So, you know, I don't think that the Fed thinks the situation is that dire. I do think that they are trying to encourage the banks to, you know, make sure that they're not going to pass their troubles on to consumers by raising interest rates on credit cards.
Peter Schiff, Treasury seems to be worried enough about the banks to at least consider that super fund, which doesn't seem to really be coming to fruition. But when Nicole says that there are other ways of fixing the market, should we just allow it to happen and not get so involved in trying to finagle and fix something?
Oh, yeah, well, the government broke it, but they need to let the free market try to fix itself, and it can't be done easily. You know, whenever you hear the word liquidity, just substitute the word inflation. That's all the government can do. When we're talking about a government bailout, remember, the government doesn't have any money. All they can do is print money, which means they socialize the losses among the American population and people all around the world who are foolish enough to hold U.S. dollars and U.S. dollar-denominated debt.
You're on.
Well, this is the pattern. This is the historical pattern. In the 80s, they bailed out Citibank and other banks because they made bad loans to South America. In 1991, the Fed clearly bailed out the U.S. banking system because of the commercial real estate crisis in the 90s by lowering interest rates dramatically. They're doing the same thing here, and I agree with Peter. All they can do is print money. They can create liquidity, i.e., they can create inflation. And what they do is they just perpetuate the cycle. They by doing this, create the next bubble, and therefore the next bailout. And we pay for this. We just pay for it a little bit every year. We don't have a shock to the system where where everybody suffers. So nobody really pays much attention to these things. It socializes the risk, and it spreads it over a long time.
The savings and loan crisis that you mentioned there back in the bailout of the late 80s, 90s, that was a totally different thing. Those were S&Ls. They're not commercial banks. They don't make loans. They take money in from depositors. They turn around. They make that. The government came in. We had a 3/4 of a recession. You want to go back to the period of the 19th century where this was happening every 8 to 9 years. We were having bank busts and panic when we had no central bank. Millions of people lost their jobs. Tens of thousands of businesses and banks went under. We had depression on a regularity of every decade in this country.
I got to say something about the 19th century because Mike brings this up every time we're on a panel together.
We had the Great Depression.
To go back to the 19th century. I'd love to go back to the 19th century to economic growth at 8-9% GDP growth. That is the fastest rate in human history. And given the capital and the lack of technology, it's faster than what China's experienced today. Really no unemployment, absorbing tens of millions of immigrants. I mean, what could be a greater economy than the U.S. economy in the late 19th century?
The point is, we don't want to go back to the 19th century. Not all of us want to go back to the 19th century where we're coming from.
We had a better economy back then.
Yeah, but we were coming from an agricultural society.
We didn't have refrigeration. Come on.
Exactly. No
I want the economic
Coca-Cola.
growth of the 19th century, not the standard of living of the 19th century.
Hey, there are countries that offer that right now. If you don't like it here, there's countries that offer that right now. You could move there.